Hello and welcome to this YouTube channel for ACCA FR exam prep. My name is Adam. In this video, I will be taking you through how to account for a right of use asset, under a lease. So the initial measurement of the right of use asset and also the subsequent measurement. How do we account for it? What is the impact on the financial statement? So let's look at the details of this question. We have PPB Co. acquired an item of plant under a lease on 1st April 2007. The present value of the future lease payments and the current amount of the right of use asset was 15,462,000. So that's a million. Now, 3 rental payments of 6 million per annum are due to be paid in arrears on 31st March each year. So this tells you that the lease term equals 3 years. Now, the useful life of the plant is deemed to be 5 years. There is no option to buy the asset at the end of the lease term. The implicit rate in the lease is 8%, and that will be for the finance cost on the lease. Now, what do we need? We want to look at the right of use asset. Now, at the date of the lease, 1st April, this was measured to be 15,462,000. Now, the figure, if not given, very simple, it will be to discount. So you discount, all right, let me illustrate that. So the right of use asset, so the asset under the lease will be the discounted liability plus any transaction cost plus any advance payment or rental. So this should give you the right of use asset value at the initial measurement. And this, from this question, because we have 3 payments for 6 years, so we have year 1, year 2, year 3. So it is 6 million. So let's say 6 million to be discounted. So you discount this by 3 years. So 1.08 raised to power 3, 6 times 1 over 1.0 raised to power 2, and then 6 times 1 over 1.08 raised to power 1. So the figure you have for, and you can confirm that the figure you have for this should equal the 15,462,000 given approximately, if there is no other direct cost. This transaction cost can also be described as direct cost to acquire the lease. So this is how we find the right of use asset, and in this question we are given, so we don't need to recalculate that. Now, the right of use asset on subsequent measurement, right from the initial measurement, the subsequent measurement, the principle is that we depreciate the asset, the lease asset, and this will be on a straight line, basis over the shorter of the lease term or the useful life of the asset. So if you look at it, the shorter, the lease term is 3 years. The useful life is 5 years. The NT have no option. There is no option to buy, and because there is no option to buy, we use the shorter, which is the lease term. So instead of depreciating it over 5 years, which is the useful life, we depreciate it over the lease term. So the depreciation will be equal to 15,462,000 divided by 3. So let's check this. 15,462 divided by 3. That should be 5,154,000. So the carrying amount at the year end should be equal to the 15,462 less the depreciation. And because the year end is 31st March 20x2, because 20x8, because it was entered into on 1st April 20x7. So here we have 12 months depreciation to calculate. Now the reduced balance would be 15,462 minus 5,154. That would be 10,308 million. So you notice that in the P&L, would show depreciation. So depending on where depreciation is classified or presented, be it cost of sales or admin, depreciation will be given as 5,154. And on the face of the financial position, under PP or your non-current asset, you have right of use asset, and the balance will be 10,308 in the financial position statement. Remember, in this illustration, we are only looking for how to account for the right of use asset, not the lease liability. Only the right of use asset. I hope this helps you to understand the lease and also to prepare for the FR exam. Please subscribe to this channel to receive updates on new videos.